Good morning, dear ladies and gentlemen, and hello, all of you, all traders. We would like to say hello here to our daily live trading webinar. We call it Real-Time Daily Trading Ideas, 5 days, 5 traders. We would like to screen the markets here, creating some interesting trading ideas and answering your question. But first of all, we need to say here our risk disclaimer. So be aware that Forex and CFDs are leveraged products and can result in losses that exceed your deposits. So they maybe not be subtitled for everyone. And please be aware that all we are showing and presenting here today is just a personal opinion and not an advice for investing. So as I said at the beginning, 5 days, 5 traders. Today is Monday, the 26th of March. So today we are have our webinar here with Jay. With me, my name is Tim. So yeah, feel free to answering here your questions. And so yeah, we would like to answering your questions here. So here a quick overview from our offerings. So for example, the DAX 30, with a typical spread of only 0.8 points during the main trading hours. If you have additional question after the webinar, so you can also contact us. Here you can see our telephone number and also our email, and all these webinars are recorded, so you will find it later on our YouTube channel. So here's a picture from Jay. I say say hello to you, Jay. Hope the sound is good and you can hear me.
Good morning to you, Tim, and good morning to all the traders. Let's see if I can share my screen. Yeah, show my screen. Yeah, and I would like to show screen number 4. 4 out of 8. What a lucky number. Okay, Here we go.
So now your screen is online, so you can see.
Guys, 83 of you here today, this morning, plus Tim, myself, 85. That's a good number. Thank you for taking the time, and let's start this week. I apologize for my voice. I'm pretty sick, but being sick, and the good fortune is when you trade from your office and your office is real close to where you live, it's not that hard. It's not like we're mining for oil or gold, right? Headlines to start this week. Obviously, we have trade war concerns between the US versus China. That means equities were offered. Offered means down. Yeah, when you offer something, you want to short, and possibly you want to either short, take profits, or you want to short in order to anticipate lower prices. Hence, we call it equities are being offered. Then on Friday, Trump signed a 1.3 billion omnibus spending bill, and that increases the US deficit even further, and that causes an increase in US refinancing needs. Over the weekend, I sent out to my newsletter subscribers a video on the LIBOR/OIS spread, and that goes right down this alley. US deficit needs to be refinanced, and we have an increase in this omnibus bill on top of already a record issuance of US Treasury bills. You will see in a later slide that this week we expect even more issuance in the very short end in the US, and that means an increase in yields because you need new buyers and you entice them to buy very short-term debt by increasing the yield that you're offering to the buyers. Oil off meaning, you know, prices are coming off on trade war concerns, but also we saw another increase in US rig count to 804. That's a 3-year high. So what is the logic behind the market? The market is looking at this and says, hey, we're increasing production in the US. Eventually that may be a bearish interpretation by the market. Production is up already by 25% compared to the mid of 2016 to 10.4 million barrels per day, BPD. Weigh that, please, against a weakening US dollar in a trade war scenario. Oil is being still traded in US dollars. We'll get to that in the next point. The petrodollar, and if the dollar is weakening, which historically it does in a trade war scenario or when tariffs are being introduced into the market, that is actually bullish for oil and for commodities. But right now, we see oil coming off. Japan's Abe is tangled up into his political crisis, so that's bearish over there. We had financials down. Naturally, financials is a sector that got hit pretty bad on Friday. We had overnight very positive numbers out of New Zealand. Trade balance was very positive, so the kiwi is up overnight. And then we have the oil future denominated in renminbi, started yesterday for the first, started on Friday for the first day in trading, was up 6% right away. Petro Yuan, it's called. It's, by the way, the exact same playbook the US dollar played by introducing an oil future denominated in dollar. So the Chinese are doing the exact same thing. What's happening here on a global macro basis is that we are developing away from a G20, away from a G8 into a G2, US and China. It's very interesting to observe this development. And they're introducing a Petro Yuan future. That's really interesting. Commodities down currently. US Treasury 10-year, very important mark for us to have a constant eye on the 10-year. It's currently ranging between 2.8% and 3%. Expect further pressure on US equities if this yield increases further. Trade from last week, we were longing the pound versus the New Zealand last Monday. We got into it with 1/3 startup position right away. This is the outcome. The 1/3 went to target right away. Then the market came off. we saw that the market was quite strong and went to target again. Unfortunately, only 1/3 of the position got filled. That's trading. All good. If you sit your butt in front of the screen all day long, obviously you can make a lot more money. But those days are mostly over for me. I intend to trade 3 times a week, London session, Tuesday, Wednesday, Thursday. And if there's some really volatile numbers on Friday, I'll make some money there as well. But I'm just not interested in spending the rest of my life in front of the screens. I've done that the last 22 years. It's now time to do something else. Overnight, strength versus weakness. As you can see, here's the positive economic numbers out of New Zealand. They were unexpected, hence very strong. But also you can see Canadian dollar above the 0 line, Australian dollar above the 0, and New Zealand above. That means yen coming off. That means the carry trade is being reinvested into. That is very interesting. What does this tell us? Please listen up. This is telling us away from risk off towards risk on. So if this continues during London, I'm positive about US equities, that they may find a bid. This is very, very, very interesting. Yeah, carry billions of dollars are going into carry trades, meaning you short yen to borrow at 0%, and you invest in kiwi and Aussie for 1.75, respectively 1.5% carry. That's interesting. Canadian dollar bouncing as well a little bit. That's a good leading indicator. Potentially, we will see a bid in equities later on. You know, we don't have a crystal ball, but this is definitely more positive in terms of risk sentiment than negative. Numbers this week, as you can see, we have a lot of FOMC speakers, and that is important in respect to last week's 25 basis point hike. And then Powell reiterated 3 hikes for 2018, 1 done, so 2 more to go for this year, and reiterated a continued dot plot. And the market got a little bit ahead of itself and kind of wanted to hear 4 hikes. Well, that didn't materialize, and that was the reason why short-term rates came off and why the US dollar came under pressure. We have, let me see real quick. We have final GDP out of the UK, out of the US with 2.7, and then towards the end of the week, this is really where the more interesting numbers come, right ahead of the long weekend. We have current account in the UK. We have final GDP and net lending numbers, slightly positive there. We have Canadian numbers, GDP and RPI coming in, no forecast so far. And then the Fed's most preferred indicator for inflation gauging, the core PCE and PCE indicator. And the consensus sees the core PCE deflator picking up to 1.6% from 1.5. So that may be bullish there on Thursday, i.e. Wednesday, if the big boys pre-position into a bullish number. So keep an eye on that. And then Saturday, that's going to be important for Aussie dollar and a little bit Kiwi as well, but mostly Aussie, will be the PMIs out of China. No forecast here so far. What's interesting, I alluded to it early on, the US Treasury will probably auction about 294 billion in bills and notes this week. This is its largest supply ever, ever. And then during this video I did over the weekend, Treasury bill supply in the last 2 months is already twice the amount from last year. it's honestly, guys, it's unbelievable. They raised the debt ceiling, and now they introduced the spending bill, 1.3 trillion and another trillion in new debt via the spending bill. This is just absolutely amazing, and it's interesting because who is the largest buyer of treasuries? The largest buyer of US treasuries is China. So why start a trade war with China now when you need to refinance trillions of additional dollars? Really, really interesting times, which I'm hoping that it will increase volatility. That means we can make more money. Okay, not that much info this week. Dollar Thursday PCE, I said it already, year-on-year rate expected to rise by 0.1 to 1.6, and the month-on-month expected to rise by 0.2 versus 0.3 previously. We're looking for higher medical service inflation in the February PPI than in the CPI. Not that relevant for most retail traders. I'm just mentioning it because I'm a perfectionist. After Fed last week, 25 basis points, that was the hike, 3 hikes reiterated for 18, 1 done. We are now keen to hear what the Fed speakers have to say this week. And then in Europe, Thursday, we have the final UK fourth quarter GDP expected in line, and that would leave this 2017 annual average at 1.7. For those of you who may be new to this, institutional game is all about who forecasts GDP growth the best makes the most money, and he or she who forecasts inflation expectations and inflation the best makes the most money. That's why trading currencies is the easiest asset class out of any asset class, and that's why I start with my traders and teaching them currencies, because it's macroeconomics. It's much simpler than going into equity investments, which is a ton of work. Okay, Thursday we have also an index that's called UK Services, and that's also expected to come in line. And then finally on Thursday, the focus will be on national and regional German consumer price indices, with attention to mainland Europe year-on-year figure expected to climb to 1.7 from 1.4. So if that really materializes, that actually means that we're looking for signs of increasing Eurozone inflation. And that then again means, hey, Mr. and Mrs. ECB, Draghi and team, what are you guys doing about your curtailing your quant easing? Okay, how are you going to reduce your balance sheet, and when are you going to increase rates? And currently, the market is pricing a first rate hike in the euro for the second quarter of 2019. Meaning, if this number comes in much higher than expected, the euro will see a bit. And also last night, I sent out research from conclusions from Goldman, Nomura, ING. I forgot who the fourth bank was. They're all concluding that they're seeing the euro dollar towards the end of this year at 130. One bank even sees the euro dollar at 135. So keep that in the back of your mind, because these are the biggest of the big boys. If they see 130, if inflation comes in lower than expected, the euro will be priced towards lower rates. Yeah. In Asia, trade wars in focus. Expectation is for US tariffs to be large, but the impact may be smaller than feared, and that is the reason why we're seeing carry trades being put on overnight. The wording is for 25% tariffs on 50 billion worth of Chinese imports. Do the math, comes out to 12.5 yards, 12.5 billion, or roughly 20% of what was implied in earlier reports. As always, not as bad as the initial reports. Well, I said always, but often that is the case. You know, market overreacts and then adapts when more information becomes available. China's response so far is for 3 billion on US imports, but US firms have 2 weeks to respond to that. So that is a very measured response. Currently does not look like they want to engage in a very hot trade war. Please, 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 please watch for any signs whether China would decrease their US Treasury purchases. That is analog to detonating a nuclear bomb, okay? So if the US pisses them off enough, excuse my French, that is their nuclear option, and the US has no way out. They can't even afford much higher rates, because basically technically they're bankrupt, but who isn't? Anywho, let's go on. So that is something we need to watch out for. Quickly positioning and vol, commitment of traders. Interesting to see that the dealers get continuously put short in terms of their positioning by real money in the yen, and last year's extreme level have already been breached, and we're now on the way to testing 2016 extreme positioning levels. Kiwi, please keep it on the radar. The dealers are also getting set short by real money. So real money long, dealers short. That's going to be an interesting observation, potentially a top edge coming up in Kiwi dollar there down the road. Volatility coming unchanged in the euro week on week. Pound coming off. Yen increasing a little bit, and the VIX increasing significantly. And VIX levels inside of 10, those days are over in my personal opinion. Yeah, one of the reasons why we saw these levels was that retail was able to invest in inverse VIX products via, for example, the XIV. That product exploded as expected by professionals, and hence that bid is out of the market. The retail bid is not on there, and some instis got burned as well. So shorting the VIX is not the most favorite carry trade any longer. It was a sort of carry trade. And guys, remember one thing, that's one of the first things you learn on a trading floor. Any carry trade will explode in your face one day. Yeah, just ask Hungarian homeowners who refinanced their houses in yen and Swiss francs. And then when those currencies started moving up, they were unable to afford their mortgages. For retail traders to engage in carry trades is dangerous. Option pricing for this Monday only showed us short dollar versus Canadian dollar, and option flows from last Friday showed us bullish for the London session, Swissy and gold. That would imply risk off in a way, which we're not currently seeing, and bearish on Monday for Aussie, pound, Canadian, euro, and yen. Now, if we look at the picture, what has materialized is yen, they were right on the money. Swissy, they were off. Dollar, okay, they're pretty much off except for the yen. The yen, they got correct and right on the money. Okay, they're pretty smart. The smartest are the bond traders, then come the option derivatives market makers, but nobody is right all of the time. Potential trade for this week, more so for today and tomorrow. I'm looking to long the Kiwi US dollar because out of our institutional process, there just wasn't much for this shortened holiday week to focus on currently. Kiwi had, again, very good numbers overnight, and then dollar, we have the trade war concerns, but that's being priced out of the market a little bit at the moment, but still it's there. Trade structure, 3 limit orders to long the market at 72.75, 72.50, and 72 the figure. Take profit 73.25, and a stop loss roughly 53 pips below the weighted average fill. Risk for the trade is obviously in case we get risk off, which would lead, to outflows out of carry trades. And we are prone to trade war headlines during this exposure and Fed speakers this week. We need to listen carefully what they have to say. If anything that they allude to is dollar positive, that trade would go potentially against us. Quick picture of the trade, 1, 2, 3. There's logic behind why these levels. There's logic behind the take profit. Quick swing trade, nothing major to go for. Let me check the time. 21 minutes. Not that bad for that much information. I wish you a very, 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 very good shortened holiday week. And I hope to see you on Monday. Are we actually, Tim, do you know, are we actually doing next Monday, or is the holiday season? I don't know, but we can talk about it offline and make some pips, guys, and hopefully this information is of value to you. I appreciate that you come here on a Monday morning to go with us through the markets. And thanks to Admiral for the opportunity to do this for you guys. Thank you. Signing off, yours, Jay.
Okay, Jay, thanks for the moment for your information here about the actually market structure for the moment. So yes, so we are just checking if we do webinars for Friday and Monday because yeah, in Germany there are official holidays, but not in every international country. So yeah, we will check and yeah, for all our clients, we will send you an email for this one. So yeah, thanks for you, Jay, and thanks you, dear listeners, for the moment. So tomorrow we are back at the same time. You are always welcome here in all of our webinars. So yeah, thank you again. You will find this session later on YouTube. Have a good day and see you tomorrow. Bye bye.